We're back, ladies and gentlemen, with another incredible podcast. We're here with Pierce Crosby from TradingView. Very excited to sit down and pick your brain. What's been new on your side since we last spoke back at the FX Summit?
Well, thanks for having me again, Roy. Obviously, glad to have you here in New York. In terms of what's been new for TradingView,
It's been a busy year for you guys.
It's been a busy year. Markets are absolutely ripping. We're all-time highs across the board. I would say for TradingView specifically, we cover all assets, so it's been a bit of a groundswell, safe to say. S&P 500 obviously is our most important metric if you think about it, but second to that is the crypto markets.
Of course.
Clearly crypto is absolutely booming. So since we chatted last time, I think we're probably about 40% above in terms of traffic that we used to have, and
wow,
continues to maintain itself, but fingers crossed, who knows, next thing you know, there's a flash crash and people disappear.
So everybody who's watching this knows TradingView, so we're not going to go into what the platform is, but there was a record amount of retail traders that entered the markets since COVID, and that's created a lot of shifts in the actual liquidity side of markets, but also in the tech startups. How has that impacted TradingView, and how have you guys seen the growth in the retail space past few years?
Yeah, I mean, it definitely has changed the blend, if you will, of who's involved in financial markets in general. But different sectors of the market have matured, if you will. Mm-hmm. Whereas otherwise, some have essentially dried up. One really interesting fact that I was actually learning about the other day is that most of the OTC business in the equity world has essentially dried up versus previous kind of waves or generations of, say, meme stock mania or things like this. A lot of that flow has actually shifted into cryptocurrencies. So these kind of new projects that have no regulator, no financial backing, no revenue or anything like that, all of a sudden they are able to launch projects into the market and create overnight insane amounts of personal wealth, even though a lot of these projects have no financial means whatsoever. But that is the nature of crypto. It's kind of like the new casino, if you will. And as a result, you see this kind of seismic shift. So that's a huge one we've seen, is kind of this move from low cap companies in traditional markets into crypto in general. Now, on the mega cap side of things, things have not changed whatsoever. And in fact, more and more, there's a huge wave towards passive investing versus active investing. So this has been obviously funded by a lot of the majors. So BlackRock, Vanguard, iShares, State Street, and that continues to this day. And we really see that actually impacting markets when it comes to repricing stocks during market close versus next day, because ETF managers have to rebalance their books, and ultimately there's a lot of flow trading around ETFs now versus, say, more traditional markets. So there's a couple big seismic shifts happening, but safe to say, I mean, across the board, numbers are up. And, I think Reddit's IPO is actually very much a signifying moment of time, which is meme stocks, social investing, and people just chatting about markets is very, very in vogue right now. And as a result, you see somebody like a Reddit going public and, being up 70% in the first day of trading, and then like another 60% in the second day of trading. It just goes to show there's a lot of appetite for this stuff, both on the institutional side, but for sure on the retail side as well.
Well, first, I think Reddit is lucky because they have a huge support network. They have an army of people that will pump the stock as a meme. So I think that's a very fortunate position to be
built in. Totally.
You mentioned regulation, which I think is the topic of the day. How have you seen regulation changed, and how does that impact your business or TradingView?
Yeah, so it's quite interesting. So obviously we went to FX Summit last year and the year before, and tried to bring some voice of reason, I think, for sure. So we talked a lot about how there are firms out there that are overnight success stories, but you really dig into, what do they do and how have they grown so fast? And oftentimes there's a lot of cutting corners,
question
if
marks.
you will. Question marks. And so we most recently saw this in what's called funded trading programs, and a lot of these challenges, if you will, where people come to the forefront. They basically say, hey, we will, take $100 from you, but then we'll allow you to enter these challenges. Potentially you'll make a bunch of money, potentially you won't, but the downside is, $100. So it's a good trade for an individual investor, right? Their downside's pretty limited, but their upside is essentially, well, maybe I could, start managing money or things like this. So this has been really popular in the future space here in the US, and then internationally, FX and CFDs have taken this very, very seriously. As you say, the turning point really has been around people starting to crack down a little more as to how these companies are funded, ultimately who owns the accounts, and there's a lot of people kind of growing up in the middle of the market, which is not so much the retail customer or the brokerage, but a lot of kind of service providers in the middle, and as a result, nobody's really kind of dug into that too aggressively until I think it was November of last year, which was like the Funded Next or something like that. There's a couple big firms that had very substantial brands, kind of grew up overnight, and we saw some takedown actions as well as I think enforcements across the board. So that does signal, I think, to me that there will be more eyes on the space for sure, because these businesses have grown so fast.
Yes.
But at the same time, honestly, creating competitions in simple terms, there's nothing absolutely wrong with it whatsoever. It just comes down to who are the players that are involved in actually, say, making markets behind the scenes, actually holding the accounts, right? Nobody really dug into that initially, and then turns out oftentimes you were wiring money offshore, and then that was supposed to be like actually kind of a normal thing to do, and in fact oftentimes you'd fund it in crypto, and then so my head starts to like spin a little bit, like, okay, well I'm pretty used to like connecting my bank account and then just having it be a wire transfer into a normal brokerage, and so I think thankfully people are waking up a little bit, which is generally good for the industry, because TradingView is a perfect example of a place that wants more education and not more regulation per se, but definitely, they want everybody to not, get burned by some kind of sketchy broker or something like that. So it's great for the business on our side. We obviously are restricted from working with a lot of these kind of prop trading firms and things like that. And so obviously people come to us every day and want to work with us. But we have to obviously draw a pretty clear line there for sure. Because of course, as you can imagine, it's, again, asymmetric downside. There's a lot of brokers, there's a lot of folks like us that really don't see kind of the risk paying off at the end of the day. It's too much risk. TradingView is a big business to deal with these kind of firms. Sure, there may be short-term money available, right? For sure. But at what cost, basically? So,
and I think that's the beauty of building something so big like TradingView, is that you're not going to be picking up pennies in the sand. You're not going to be chasing pennies in the sand and giving up the real opportunity, which is building the largest platform and an integrator. Now, one thing that I love about TradingView is the vetting that you guys do for the platforms you allow to partner with you. Yeah. And you spoke about this at the summit, but could you give a quick rundown of if you were to partner with a prop firm, what would you have to see? Yeah,
well, so across the board, we prop firms in general, we can't partner with them from a integration perspective. So it's a simple kind of unfortunate reality. We do still have the ability to license them some of our technology. So if they want to build their own platforms, that's great. We have a ton of tools for them to do that, to plug those technologies in. What I think you're referencing in general is we have a very strict policy around basically KYC and AML for brokerages that we now integrate to TradingView.com.
Yes.
This is something that basically when I joined, I emphasized that we needed to do, because TradingView has always been a front-end technology, and we do a ton of everything from market data to analytics to news to social. But when it comes to actual trading and investing, we realized, one, this isn't our expertise. Two, if we were to go that route and become a broker-dealer ourselves or something like that, it would come at the burden of actually building out an entire compliance team. At the time when I joined, I mean, we were 70 people, right? I mean, even though we're 700 people now, we still don't have the time to set aside another 100 people for compliance, operations, et cetera. And so, but if you think about it, the workflow of an average investor, they come to TradingView, they learn a little bit about the markets, they find an interesting thesis or idea that they really care about, they research it, they look at it in the chart, they look at the fundamentals, they look at the news, and then it comes to a moment where they're ultimately going to want to invest. And in that moment, we usually have to pass them to another website, right? Like I have to go to fidelity.com to actually trade.
Right.
And so when I joined, I was basically like, guys, we need to actually integrate these brokers directly to us such that they don't go off-site and then we lose them as customers. Right?
Genius.
And so the whole workflow was to build like a walled garden, but then allow the brokers in such that we could basically complete that entire life cycle on the platform.
Of course. That's so great. And I think that does take like a bit of I want to say an innovative approach to see where the future is going, where partnership and integration versus trying to build a proprietary platform and slowing yourself down to compete in these individual markets where they have the edge because they're spending all day on it.
Oh man. Totally.
So what really is the end goal for TradingView? Is it to be an integration platform for the brokers? Is it the social aspect? Is it the charting technology? Which one of these do you see as being the main driver for TradingView?
Well, I think it's interesting because a lot of brokers or a lot of like technology firms, everybody wants to do one thing really, really, really well. We've kind of adopted an approach now, which is we do one thing really well, but we multiply that across a bunch of different verticals. And so in this case, we have to be the best at charting. That's what we do. That's what we're known for. But now we believe we have to be the best at things like market data, things like real-time analytics, alerting systems, execution.
Oh, wow.
All these verticals in one. And to be honest, I think that few people really think about it from like a comprehensive workflow perspective, kind of what I explained, like the individual steps that take place. And so from that workflow, we believe we need to be the best at all of those different pieces of the workflow. So
we're kind of consolidating the process of finding a trade and putting it all in one platform so you don't have to keep bouncing around.
Correct. I think
there
that, and we do know what we're good at and we do know where we struggle. So actually quite interesting. We just killed live streaming. So we had live streaming as a product on TradingView for almost a year and a half, and enough uptick that it was an interesting product, especially for the really hardcore users, because not only were people using it to just chat with fellow traders, but actually people building businesses on top of it, where you would host a live stream or a private event or private kind of a webinar type video. We had a ton of usage from a very, very hardcore segment of customers. The problem being is we were really hoping to see somewhat of a groundswell. And when you're dealing with 70 million customers per month, you really have to see millions of customers use the product before it's actually considered successful. Right. And so it's this huge barrier to entry. And we have to be very, very judicious about, can we improve the product? Can we change it, et cetera? With live streams, we felt like we were getting there, but at the rate of growth, it was lagging the rest of TradingView. Yeah. I mean, usage across all our products usually is up and to the right. And if it's not really that hockey stick type growth,
it's not worth pursuing.
It's not worth pursuing. It's also a matter of costs allocated elsewhere. Like we have a small team, and honestly, there's a huge emphasis on resource right now. We've been actually cutting back a lot of like pet projects because unless they have a very distinct and defined timeline and outcome, they can be very nebulous as to what do they cost us. And ultimately, what costs us money is time. And so we have to be very, very, very sharp on like, okay, is this a defined outcome or is this a potentially big business? And so we have to kind of really map that out before we go into any serious projects these days. So
I'm glad you touched on that, because a lot of users are always demanding new features and they don't realize there's an opportunity cost to every project that a company has to take on. So if you want, let's say an iPhone, if you want multi-chat Zoom call or FaceTime calls, you're going to have to give up, let's say, the integration between your Apple Watch or something, because you can't integrate everything at once. So what would be, so I guess the charting platform is what everyone really knows you for. I had no idea that you guys had a live streaming platform. Could I give you my take as a live streamer?
Sure.
So we were working with Binance on a similar project where they had a live streaming platform, and
Binance
I realized
Live.
that but the benefit of being on a YouTube, for example, is the traffic, right? So the reason that you want to be a third-party seller on Amazon is because you could take advantage of the flow of traffic directly on the site.
Sure.
And so if there was a way to be able to stream on multi-platforms from TradingView, that'd be worth opening it back up, I think.
Well, we did that. So we did integrate OBS. So we had multi-platform streaming, actually. So
I guess we just didn't know. We stream every morning, and we use TradingView every morning. So
I think that there was something to that as well. I mean, our marketing messaging wasn't really strong on it. It's not a single issue, right? It's not like the product was shitty or anything like that. It comes from like. You kind of have to have like a decision tree of, making good product. If you really want to invest in a single portion of your product, you have to think about it from the engineering standpoint. Like the product has to be good, right? But that's for us, that's kind of table stakes. But the next step down is, okay, how is that actually translated, and then step that further down. And how is that actually, marketed appropriately to various customer segments? And there's a step down from there. And so it's a decision tree that actually needs not just input from core engineering. Like core engineering at TradingView is amazing. Like they crush product. But in terms of marketing and messaging, sometimes we just don't really emphasize certain products enough. And then I think some definitely get lost in the mix. So
without going into like proprietary info, could you give a rundown of the decision tree that you go through, like a quick back of the napkin version?
Oh my God. There is no linear process for deciding things at TradingView. I'll say that. The most important factor I could say, not disclosing anything proprietary, but the most important factor is customer feedback. And I think this actually separates us a lot from most other companies out there. Most companies, I think, especially in the trading space, usually it comes from people who have been successful either in trading or maybe been at an early stage product before, and they believe, well, I've done it before. I know what the customer wants. The CTO or the chief product officer of TradingView, he's been with us since the beginning, and before that, he built 2 other companies, and he's still in the trenches on Twitter. Or on X, sorry, in Telegram, watching various YouTubes, et cetera, to actually understand, like, if somebody's live streaming and talking about our product, we want to know what they care about. And he is that humble where he's literally just in the trenches chatting with customers every day. That it's like a level of obsession that is really hard to come by, I think, because a lot of people build an ego about like, I know the way things should be built. And he's never adopted that personality. So as a decision tree input, I would say customer satisfaction and customer feedback is the single largest component. Everything after that is really, does it hit that kind of 10% threshold? And what I say by 10% is, basically, it's actually a mantra used by Facebook and X back in the day was, does this have the potential to lift our business 10%?
Okay.
And if you don't see that the outcome can get you there, even in its infancy, meaning you can't see kind of like a clear trajectory to kind of put you on a path to at least having a 10% impact on the overall business, then it's very hard for the executive team to really bet on something like that. And so we take those 2 in combination. What's the size of the potential product that we're trying to build? Plus, is this actually in demand, as an example? And it's actually quite well known. It's starting to be quite well known now, but options is actually one of those key areas that for a long time has been a product requested feature. But internally, we never really thought that this was a business that would actually be a 10% threshold business until we started to realize that the dynamics of the equity markets are changing such that when you have a zero commission environment, what that ends up doing is killing a huge portion of brokers' revenue. And historically speaking, the bedrock of, say, E-Trade or TD Ameritrade has been equity trading volume. what that means ultimately is that they need to find a different mix of products that they can offer to their customers. So futures has become very popular, as we discussed. But the other big product, and you can see this in like quarterly results of Robinhood, Schwab, like all the public companies, it's options at the end of the day. So more and more, because we are starting to work with more and more brokers, we keep running into this as kind of a statement problem where a broker wants to work with us, and ultimately they say, okay, well, you have equities, you have crypto, you have futures. Where are the options? Mm-hmm. And so for a long time, the founders didn't really think it was a product that was that compelling until we realized that the whole market had shifted around us. So.
Is that because of any data that you guys saw where you saw there was less interest in options, or was it just not something that was on? It was the regulatory hurdle. Why did you guys just, out of all the different instruments, that just?
Yeah, we kind of forgot about it. Well, I think that at the end of the day, it's when you're building net new product. What's kind of challenging is you don't really have a lot of input. Like you can't really, just pick some like dust out of the air and think like, oh, this has the potential to be successful or not. You really have to just listen to customer feedback, and ultimately, for options specifically, it came down to we kind of operate a little bit on, say, like a mid 2000s mentality, which is to say like, we know what the market is doing from a overall revenue perspective, like who's making money, how are they making money, et cetera. Mm-hmm. We hadn't really updated those models as fast as we could have. And the new model, right, the Robinhood type model is, it's completely different than the, E-Trade type model. E-Trade type models more traditional. Robinhood models much more dynamic in terms of their product mix. And so, that was the main input that we needed. And thankfully we got there. So options will be coming in the near future.
Okay. I don't trade options, so I'm not, that wasn't a personal question, but I appreciate the breakdown. This might be a little bit of a tough question, but for us, an issue that we found is that there's a vocal minority of users of the product that will give feedback. And so when you start making decisions based on the vocal minority, that's when products that launch don't do as well, because it just doesn't have that integration. So you mentioned that a lot of the decisions that you make at TradingView are they're objective. Mm-hmm. And so how do you find that mix of knowing that this is, or being able to discern this is a vocal minority that's telling us to build this one small niche thing that's going to distract us versus something that could have, is that the intuition of experience of knowing what people actually really need, or? Yeah,
so what customer feedback is actually worth taking? That is like the biggest question for sure. Yeah. No, that's $1 billion question for sure. I would say in general, the biggest advantage to being big is literally that. Because we get so much customer feedback now, we don't really need to weed out, say, the bad eggs or the good eggs, because we can see an average. And in this case, you're not optimizing for a couple key customers, but across the board, our support system, I think we have something like 3,500 tickets a day. So in which case, these are support tickets or request tickets that basically people are, hey, I need this, or hey, this is broken, or hey, fix this. So the scale is really like
that's the benefit. You just get to see where all the problems are.
I would say, but that's not always true. When you are a small platform, and important for small platforms to realize, there is a certain element of intuition, which is, being able to talk to enough customers that you start to recognize patterns. Even if you don't have thousands of customers, you still have to kind of aggregate all that information and think about, okay, across maybe these 150 customers, what is the most common thing that comes up? That's really like the early stage mentality. You got to trust your intuition on that. Mm-hmm. But like I said, the chief product officer at TradingView has been doing this. Before this, he built another product called eSignal. Before this, he built another product called Multicharts. So he's in the trenches enough to talk to as many customers as humanly possible, and thus has a really clear understanding, I think, of what's the threshold for, is this worth my time or not, basically. Yeah.
I mean, coming from Multicharts, if you really think about the inception of digital charting platforms, So he's seen it from the very beginning, and so I feel like that's an edge.
Oh my
and
God.
so it's incredible that he's able to humble himself, even though he's a pioneer.
Totally.
Because the pioneers typically have the most perspective and the most context.
Yeah.
So that's really awesome. So what do you feel like drives him to do that? Is it a love for the product? Is it an obsession, or is it just a logical understanding that customer feedback is the direct route to progress? Like, is it a personal thing, or?
Yeah, no. I mean, I think to talk about what drives him specifically, I mean, you have to think about who he is. He's just a lover of product in general. He's like a Tesla fanboy. He's like a huge. He loves like products like Figma, which is like a very, very nice intuitive design product. I think he, in abstract, really loves product for itself. And so it doesn't even really apply to markets. His whole philosophy is just being the best at whatever product we're building ultimately is. I think if he was in any other category, he would be the exact same person.
That's
which
awesome.
is like, he just like wants to build the most flawless product possible. And so our design team is a reflection of that. Like, they are all meticulous and like really, really refined in how they actually pick out. Like, I actually was on Slack the other day, and there was like this huge debate about the future of beveling edges for our website design, and whether or not it should be a very, very curved edge or a kind of a more slight edge. We're talking a difference of maybe 10 pixels, and we had probably 50 different people arguing all in parallel as to the benefits and costs of each decision. And so that's the degree of like separation between like obsession versus people are like, it's good enough. Like, it'll work. Who cares?
Yep.
They literally obsess over the details, and it becomes kind of an art form in that case. Like they're operating on a completely different wavelength, and people are like, whatever. It looks good. Like, no worries.
But I think that 1% that is overly obsessed and perfectionist but takes action versus those that use perfectionism as a crutch to not do anything. It's like, oh, it's not ready yet. It's not ready yet.
Yeah, true.
That's what I feel like is the difference between the small companies that are going to hear this and say, oh, we got to sit down and deliberate. No, sometimes you really just have to get projects moving, and I think it's really important. So speaking of partnerships, TradingView first had like the integration platform with some of the large brokerages, but now I'm seeing a lot of small scale companies integrating TradingView on their sites.
Yep.
So talk to me about those recent partnerships, and where are you guys building out this platform for companies like ours to work?
Yeah, totally. I mean, we had to start with the big guys. That's kind of how we, broke through, if you will. Kind of, if you really have to chase some whales down in order to reach escape velocity. I think that's clear to say. But I mean, now that we are as large as we are, we've definitely grown up, and we've matured in terms of how we build partnerships with various firms. I mean, my team overall globally is about 17, 18 people who just specialize in different regions. So we have somebody specializing in Thailand. We have somebody in Australia. We have somebody in, 2 people in Japan. We have a couple people in China. And they are all kind of local experts into markets and help us localize what we do on a global scale such that we can really make the most impact on a local market. So we've matured that model, and now we're able to go after smaller and smaller companies to work with because we actually have local expertise combined with our central kind of partnerships team that allows us to really scale the effort in a meaningful way. In total, though, I mean, it's still a small team. We have about 35 people on the partnerships or business team. I think in general, we want to do better. We always want to do better. But the key factor that we started to separate out was, again, regional specificity and then product expertise. And so product expertise is we now have product leads for each individual part of the product suite that we build. You wouldn't really know if you just came in the front door, which is tradingview.com, but TradingView actually has about 7 different businesses built around it, everything from licensing of technology to affiliates, to advertising, to strategic partnerships, to data integrations, to brokered integration. It's insane. And so we really had to like build out a specialist team as well. So now we have like a crack staff of like 1 or 2 experts per business line that can really speak the local language quite literally in terms of what the product is, but also in a local regional market. that's allowed us to really expand kind of our reach, and something I'm really proud of actually over the last couple of years that we continue to execute on. So, I mean, in total now we have on a global basis about 8,000 partnerships, which is everything from random like tech startup who launched like a Bitcoin mining operation to some of the largest brokerages and exchanges in the world. Right, the scale is pretty insane, and I mean it just comes down to really making it very, very repeatable and off the shelf. But then you have to have that local hand holding expertise as well. Yeah.
This question might be esoteric, but if I could ask you to make a prediction, so I'm kind of harping on Amazon. I just got finished reading a book.
Yeah.
So you know how AWS was one of those segments of the company. So you mentioned that you have different divisions of the TradingView business, and they never expected AWS to be the dominant. If you were to make a prediction about which
broker,
or which platform is going to be the AWS for TradingView, what would you say?
Yeah, I mean, that's a great question. I think initially we believed that our charting product, it's our bedrock, right? It's like what we're known for. We early on, that was our first product. We basically built out a business line to provide charting for third-party websites. Very, very simple. In fact, it was literally just a piece of iframe code, copy paste it into your website. Super, super easy. It was how we initially kind of got the word out. Very, very simple. So charting initially seemed like a focal point for us. And the problem was,
you beat that game and it got too easy? Or what?
I mean, in simple terms, two of our competitors sold their businesses last year. The third one shut down. The fourth one is still, crawling along, if you will. But it's kind of wild. I think we actually kind of smashed that market. It's like very hard to find really, really competitive charting products at very, very reasonable price. The problem with that market, I think overall, though, as we've discovered, is once you kind of saturate it, there's not a ton of levers that you can pull beyond, kind of very low cost charting. Like people don't pay 6 figures to 7 figures for charts. It's just not in their product budget. And so we think that, the actual revenue driver or catalyst for the business is much more around what we're doing with the brokerages and exchanges. We integrate some of the biggest stock market exchanges, futures exchanges, et cetera, into TradingView. And we license that data to individual customers. So it seems like not that big a business, but at an enormous scale, all of a sudden we become a huge, huge input, not just for us, but actually for those exchanges.
Yeah.
So if I was for some reason trading like in Morocco or something like that, we are one of the only providers of real-time Casablanca Stock Exchange data in the world. And same goes for I was actually on a panel yesterday, Mongolian Stock Exchange data. Who knew that even existed? But safe to say we have it and we offer that in real time to customers all around the world. So that business is almost infinitely scalable. And we realize that applies to also the brokerage industry in general. And so our next goal is to just acquire more customers in all those regions such that we can sell more subscriptions of either data or analytics or what have you. So that really is the AWS moment. And when I say AWS, it's like, Amazon.com is a great business at scale, right? But AWS is the revenue driver. So for us, charting is the Amazon.com, but the revenue driver is for sure the brokerages and exchange business, and that's kind of our focus in the future.
That's so good. We touched on this probably 2 questions ago, but back in the day, there was a model of, we had free social medias, and in exchange, we had the advertising model. And then there were some platforms that decided to go paywall and subscription instead of the free model.
Yep.
And so brokerages traditionally had the fee model. And then now you have this Robinhood payment for order flow model with no commissions. You being so integrated in the space, do you see a shift towards that low fee alternative so that traders get better fee structures, but in exchange they're selling the data? Or where do you feel like the future is going?
Yeah, I mean, this one is quite talked about a lot. We definitely see the costs and benefits to these payment for order flow type models, but ultimately, if I zoom out and think about the space and the evolution overall. Even a generation before us, not to say that I'm an old man, but I'm an old man. The generation before us was still paying anywhere from $20 to, in some time, like $50 per commission. And you would literally be calling a broker, some guy sitting in St. Louis, and basically call him up and say, hey, I want to place a trade for 100 shares of Microsoft. That was less than 50 years. I mean, we're talking like 30, 40 years ago. Mm-hmm. And so in general, the fact that has gone away and instead we're replaced with a mobile application that allows you to buy those 5 shares of Microsoft, for less than a penny. I think that is net positive. On the back end, what that creates is a lot of gambling, where people see such a lower barrier to entry, they just get started quickly. In this case, commissions were almost like a restricting factor to make you really think before you actually act.
The cost of entry.
Cost of entry. And so in this case, there is some benefit to having a little barrier there. I think taking the training wheels off and giving everybody a Ferrari is a bad choice, but that's literally what you're doing. You're basically saying I don't need to have like a Morgan Stanley prime broker. I can literally go into the market and make a trade right now for literally essentially free. So I think that there's, pendulum swings both ways, right? Right now we're in the Robinhood era, but I do think you're starting to see the beginnings of a in-between. And what I mean by that is that there are some people that are building subscription models around brokerage. There's some people that are building added services, or basically giving you the option to either opt in to an order flow based model or opt out and go direct to an exchange. And these kind of, what would you call it, like sea of choices, I think is going to be much more compelling for maybe not the, kind of really basic investor, but our audience in general, they're kind of more sophisticated in some ways. And so we haven't really seen a new broker come to market that sits kind of between a Robinhood and between a Charles Schwab. There's really nobody in that middle ground. And that's really, I think, where the big market is. For the most part, we see it. That's our audience. But safe to say, nobody's really stepped into that. And some people have, but really they're few and far between. I'd say like Webull is a fresh partner of TradingView. They integrated all of their APIs to TradingView.com. And they sit in between this middle ground. They're an advanced trading platform, but they also do offer like zero commission trading. And so I think that there's going to be quite a few more of those coming to market that do a little bit more, cost a little bit more, but this kind of 0, 0, 0 everything, you do for sure have to think about it a little bit, kind of like the Facebook model.
How are they going to make money?
Yeah,
where is it going to come from? Because if it's not coming from the front end, then it's coming from somewhere. And
totally. And you really got to be careful with that. I think if anything is free, always ask questions.
That's awesome. So in the future, you're seeing more optionality as opposed to this consolidation that we saw before?
For sure.
Awesome.
I mean, the low cost, it's kind of AWS as well. Like the cost of building a broker now has fallen precipitously for the last 10, 15 years. There's still fixed costs to it, but at my previous role at this company, Stocktwits, we built a broker. I fully know that cost, and it's pretty cheap, relatively speaking. So as a result, barriers to entry is falling. I think there will be a lot of folks who'll have the opportunity to build small kind of startup brokers. And
which is a double-edged sword, you would say, which is more optionality, but also more room for shady behavior,
shady behavior, people stepping into the market that clearly shouldn't be in the market. But it's a free market. That's the
So to wrap up this conversation about regulations, how do you see regulations changing in the future? And I want to talk about how you think it's going to affect your professional partners, and then how you think it's going to affect retail. Because I see the more regulation that steps in, the higher the costs are. And so when the prop firms got kicked out from the States because regulators stepped in, now we're seeing IC Markets and Oanda start to kind of pitch these ideas and float these ideas around of starting their own firms.
Yep.
And we know that those are going to be much more expensive and they're going to be much more regulated and less efficient. So how do you see that game affecting both sides, the commercial side and also the retail side?
Yeah, I mean, I think that it is for sure obvious to a lot of the brokers and the commercial side of things that this prop world is a significant business. And I think a lot of these success stories that we've seen in recent time have been a result of brokerages not being like caught flat-footed, but essentially being caught flat-footed. Like they really didn't see this market, coming. And all of a sudden you have these TopStep is a partner that we've worked with for some time in Chicago, and we license them a lot of our technology. They basically came out of nowhere. I mean, they'd been grinding for years and years and years. Business has actually been around for a long time, but they switched their model slightly, and all of a sudden it's hockey stick growth. A lot of brokers are aware of that. And they do see this kind of new generation of investors who want to have these kind of combines or competitions or things like this. That takes a long time for a broker who's a very regulated entity to make a move or a shift in that direction.
Of course.
But safe to say, now that they do realize the size of that business, it is for sure coming. On the retail side of things, I do agree with you that the bigger guys are not interested in providing maybe lower cost solutions, but that does actually present kind of a Robin Hood opportunity, which is, if you think about it, like from a very what would you call that? Like a low cost kind of prop solution or low cost trading combines or low cost, but also having infrastructure that is actually reflective of traditional markets.
Yes.
Whether it be like a trade station or whether it be an Oanda, these guys have infrastructure. Now, if somebody came in and really thought about it from, kind of a Robin Hood mentality, that's a big change and that's a big shift. So
that's awesome.
I think there's probably a couple people who will try that out first, but it'll take some time to get there, right? Because that first wave is really brokers trying to do this at all as like a starting point, and we've yet to see that. So
I feel like their timing is impeccable because I feel like they allowed the sandbox to play itself out, and they saw the pros and cons, and then the regulatory landscape is so unclear that now, as soon as there's regulatory clarity, then the guys they want to step in. But the issue that I'm seeing is, let's take crypto for example. You can have a company like Coinbase play by the rules every step of the way, become publicly listed and get audited accordingly, and still have issues with the SEC because of the lack of clarity in regulation. So do you think that the current regulatory environment is sustainable for startups to really build, or is it always just going to be, if you get big enough, it's, regulators will step in and you're going to be embattled in lawsuits long enough for your competitors to take your market share?
Yeah. Well, I think that it's interesting that there are a few firms, especially in this space, that have taken the necessary precautions, if you will, which is to say that like a lot of this industry grew up overnight, but nobody really built themselves like a war chest, such that when regulators do step in, they're ready to actually handle that. And so many of these firms simply disappear or ultimately, go by the wayside very quickly. So I think that, if a business is really good, if it's making some insane margin, if you're seeing 100x growth, you always got to be cautious with how sustainable it is. And ultimately, folks who grow too fast are for sure targets. Meaning it's just the nature of regulators is always going to be reactive. And the louder the firm, the easier it is for a regulator to react, right? So I'd call it like rainy day funds is the way to think of it. If you're a startup and you actually really do want to build in this space specifically, you should, think about how you can really grow a customer base, but always think about a rainy day fund because the reality is, regulators will come after you at some point. And so as long as you're fully buttoned up and the business is actually, operating above board, you'll be ready for that. For others who literally are just managing it in Excel spreadsheets and stuff like that, you've got no chance, right? You're absolutely screwed. So
was that a dig on Sam Bankman-Fried?
Yeah, exactly.
That's awesome.
I mean, exactly. Yeah.
So just to wrap this up, there's most of the audience that's watching this is going to be traders or investors. So based on the trends that you're seeing, Is there any advice or any words of caution or anything that you could tell retail traders just in terms of the data you're seeing? Maybe folks are spending the most time watching charts that they're losing the most money on, or so. Is there any interesting data point that you could share that might give some insight to folks?
Sure. I mean, I think if I step back and think about like what's been happening on TradingView from like a data standpoint, where people are spending most of their time, it's interesting that a lot, even in this kind of recent boom cycle that we're in, it's literally a boom cycle for sure. And I don't say that just because of like prices going up. Prices go up all the time, but in terms of the traffic that we see, it is a boom. Like it's the biggest numbers we've seen in history, and as a result, you really got to think about, okay, where is all this attention focused? Now, last week it was like Solana meme coins. Next week it's going to be fucking base meme coins, and it's safe to say like there is now this interesting model, which is a lot of social networks kind of drive audiences in specific directions. And you got to really think about not being on the other side of that directionality, right? If you are in a bad trade, if you're in a trade and you have a lot of conviction, that's totally fine. But the rest of the market may choose otherwise. And previously, there wasn't that kind of crowd mentality, but I think we saw it back in the day with Wall Street Bets, perfect example. But nowadays, that crowd mentality really does crowd certain markets. What's really wild, though, is if I look at all the data on TradingView, there's a ton of companies that are doing insanely well in equity markets and crypto markets, et cetera. They get no hype on social media. And those are often the places that I think are quote unquote overlooked. Now, you can't invest in some oil and gas company that literally, is never going to see the light of day, but you have to think about like, is this a story stock? Is this a real company? And can you potentially find something that is both of those, like an actual business that actually has, story stock value or potential meme stock value. And that really is kind of that sweet spot these days. So
that's so good.
Yeah.
Always. I think people get caught up in like the Dogecoins, for example, where it only has the one aspect, which is the meme aspect. Cause it's like somebody like Elon points in that direction, you're going to be successful, but that is the anomaly.
Yeah.
And what you're saying is that there is a perfect mix between both, something that has the potential to become a meme stock or a meme coin, but also has a legitimate business infrastructure behind it.
Yeah.
And a legitimate
use
case.
To find, but those do exist. And maybe they're not discovered yet. But I mean, this is the thing, is like this whole meme wave right now is just so new that people aren't really digging in that second layer down, which is like what's the under the hood of this business. So
most of the viewership for the Solana meme coins is probably these guys on 15 different devices.
Fair enough. Yeah, literally. No, it's kind of a moment in the market where people are literally, some people are making millions of dollars overnight. Some people are losing $1 million overnight. But that's a sign of a good casino, if you will. So
solid. It's
not exactly investing long term.
All right, so have a framework and have a clear system for how you're going to invest. Not just go out there and follow hype, but have a clear edge and have a clear way to invest.
And honestly, FOMO is a factor. You always got to think about that, but don't kind of overexpose yourself because you miss something. That's always the worst trade.
100%. Yeah. Wow. Pierce, thank you so much. Thank you for your time today. Ladies and gentlemen, you guys can catch all the links below if you guys want to follow Pierce and stay in touch. And of course, TradingView, the #1 charting platform in the world. Make sure to click the link in the description. Peace.